All right, everybody, welcome and thank you for taking the time to watch tonight's webinar or recording of my strategy and just a little bit, of information you've probably heard before and so forth. But, I find that if you just really take the time to kind of listen to what I'm putting out there and try to apply it and to incorporate it into your trading habits, I believe it will help you become a better and successful trader. In saying that, there are so many different things that will come across that can change your mind, that will make you do things differently than what you had planned to do just moments before taking a trade. And that's where you really are going to find yourself and be able to perfect your trading strategy. But first, we have to start with something, right? So, and that's why I've asked you to come here tonight and watch this. And if you have any questions, please feel free to reach out to me afterwards. Please like the video if you find it useful in your everyday trading. And let's go ahead and talk about it. So, disclaimer again, nothing I say or anything I show you is any recommendation to buy or sell any securities. That includes futures, forex, options, equities, and so forth. Okay. What I'm trying to give you is just a good trading strategy that will help you. So how do we get there, right? How do we get to the execution of a trade? The first thing I want to do is just kind of go back in time with you and make you understand what it is we are trading. And if you remember my old video from Tesla, I'm going to actually take everything off of here. And this is all impromptu, just like any other video I've ever done with you guys. So I'm going to take everything off of there. I'm going to go ahead and take off the edges as well. Okay, and you guys know I use the edges, and we'll be covering the edges as well here shortly. Okay, so we're going to take off the yearly, and we're going to take off the weekly, and we're going to take off the monthly. No reason to see any of that. All right, and then we're going to go to a higher time frame. Okay, and we're going to go to the monthly. This is Tesla, and this is a monthly chart. Every candle on here represents 1 month. The idea here is to find demand and supply. Okay, so we're going to talk about supply and demand first. Okay, foremost. And I want to explain to you, I don't necessarily have to show you how to find supply and demand by looking for candle patterns. However, if you are interested in finding them, there are many, many resources out there. And there's a website out there called Trade with Simon. It's great. I don't even know the guy. I mean, he's overseas somewhere, and he has some of the best pictures for illustrations on zones. You can use OTA, all right, and you can go to YouTube and you can just Google, how to find supply and demand zones. And there's a lot of information out there. But one thing that I pride myself in is, and some find this pretty trivial, is that you can find supply and demand within a range. It typically comes between 85% and then the higher of that frame, 15%. But let me demonstrate that for you, okay? What I'm simply saying is when we take a range, okay, this is a range here, and let's just say we're going to measure this. When we measure this, we find that right in here, about 85% and below, you will find demand in here. Okay. Tesla's finding its way in there right now. Okay. And up here, about 15% of the way, you're going to find supply. Now, that brings me to talking about the edges. The edges are simply taking a range, whether it be the yearly range, the week range, the day range, if I want to break it down into 8 hours, 4 hours, and basically I've taken the previous range and I have placed the edges within these percentages. And that's why they work so well. And I'll show you a little demonstration a little bit later on that, okay? The demonstration of edges and how they work. But the strategy is to always understand where these levels are. because they're super important, right? So if we're just about to get into demand on Tesla, but you hear a news article that's bad, it makes you want to jump on the put side. And then, typical retail traders are waiting to the last minute to really ride something. And then they find themselves, at all because it turned around on them. So in this case, I could tell you from a monthly standpoint, I would be a little skeptical getting short here. Now that's just me, okay? And I'm not saying like, that you can't do a scalp trade during the day and make some money on a short, but the bigger time frame is what I'm concentrating on here. And you can see that we're getting close to that range, okay? Now I'm going to take you over to a weekly and kind of demonstrate to you supply and demand again, okay? Now looking at these candles, was from quite some time ago, okay? And you can see here in this area, we have some demand. In this area, we have some demand. And since those guys are so close, I'm just going to go like this. Now, before, you're probably asking yourself, well, okay, but, you know, what's he looking at? I don't know what he just did. He just put a line on there. Well, let's take it to a little bit more simplistic and look at it from a range perspective. Okay. So what I mean is what I just showed you. You are looking at the top of this candle here, and we are looking at this range. So from this pivot low, okay, to this pivot high, and we come up about 85% of the way, okay, right in here, say right in here, we're looking at demand. Now in this case, I used a candle pattern, okay, that's also demand, and since they're so close, I'm going to outline both of these. Okay, what I'm trying to do is demonstrate to you that on higher time frames, that's what in the room we're using the trigger alerts for. So if you ever see this trigger alert go off, it's going to say something like, hey, Tesla's coming into weekly demand. All right. So, but I'm trying to show you the simplicity of looking at a range and understanding why, John, why are you looking at this range? Well, I just want to identify it, guys. I just want to identify it so that if price ever comes back here, I'd like to get long in Tesla. Because remember, supply and demand is all about value, right? You want to buy something when it's on sale. You don't want to buy it when it's up here at the highs. So a patient investor will wait and get behind where the money is. Okay. So here we are. We're going to identify this, and I always come up a tad. Okay. And I always go down a tad. And that's to give me a buffer. The idea of this is to wait for price to get here and then we take a trade. Okay. This is on a longer time frame. Again, just giving you an introduction into supply and demand and how to identify it within ranges, whether we are on a monthly, a weekly, a daily, a 4 hour. Don't get so bogged down with, oh man, I really got to understand this candle pattern. We just want to get into, that area of support and area of resistance and an area where we know, traders are willing to buy and where traders are willing to sell. And I should say bigger money is going to buy and sell. Okay. So we put out our alerts and we wait patiently and we wait and we wait and we wait, and time's gone by and you're like, man, John showed me this thing back, a couple years ago. It's still not there. Oh, look at that. Ding, ding, ding. It goes off and you're like, by this time you're already a professional trader. You don't care. But you remember this conversation that I shared with you and you say to yourself, holy cow, there it is. There it is. Now, what do? You buy here. It's demand. You don't think about it. You don't turn on the news. You don't look up the news on Tesla and, hear all these bad things. You do this because the probabilities show that looking at the inception of the market, when the market first started, that supply and demand has always been the reason why prices go up and the prices go down. I mean, think about that. If we didn't have any demand in the market, prices would just hit the floor, right? And if we didn't have supply, prices would just continue going up. And, that's never going to happen. Okay. So here we are. We buy. One of the strategies that I use is when we buy, now we turn it around and we look at the most recent range. What is the most recent range from this pivot low to pivot high? Okay, you can do two different things here. It depends on your taste, what you want to do, right? You can take this range from here to here, and you can measure from here to here. Now for me, this is 158 where you're buying, and this top up here is about 243. That's pretty far away, folks. All right, so we're going to measure, okay? I'm going to show you this. This is sideways action. This is range. This is what I want to measure right here, just so that we're on the same page. Okay, so we're going to apply our Fibonacci's here. We are going to go to the pivot low there. And what is our first target in the trendy options room when taking a trade like this? Whether I am on a weekly, a monthly, or a daily, I'm looking for the test of the 50. Okay, so I buy here 158, and I'm looking out to get, at least trim around the 185 area. And right here we trim. Okay, now what are the rules? Now I want to stay long above this with a stop below the 50. Okay, and as you can see there, price continues to go up. And as we move up, we want to look at supply. Now check this out, folks. I can't make this stuff up. You could give me any chart and I will show you how this works before and after. And I think everybody in here understands that. They believe what I'm preaching, what I'm showing you is we have this range, okay, from here to here. We've created some demand in here. And up here, 15% or so, we probably created some supply. Okay, let's go ahead and mark that. We don't have to do anything crazy. Let's just mark it with Fibonacci's. Okay, I'm going to do this to there. So I have put this here at the pivot high, put this here at the pivot low. Because as price moves away from here, I'm only interested in this range. Okay, this range right here. All right, so I'm going to put a line here, and I'm put a line here. Then I'm going to move down a little bit, and I'm going to move up a little bit. Okay, about right there. All right, and this is where I expect price to turn around. But John, how could you be so amazing? How does this work? Now let me ask you this. Now that it's done that, where are we looking for price to bounce? Now, what I did share with you is that within these ranges, depending on what range you want to pick, there's one, there's one, there's one, there's one, there's one, is that we have a mid-range, right? We have a mid-range. So basically all I'm saying is 50% of that range is where we find relief bounces and relief retraces. Okay, I don't know if that makes any sense, relief retrace. Does that make sense? I don't think so. All right, so now if we were going short here, we want to know where price is going. I would be, maybe shooting for about 50% of this. So let's go ahead, rinse and repeat. There's the 50, folks. Okay, this is impromptu, by the way. And this is the 50. We found some value there. Oh, price is going back up, right? Where do you think price went? Let's take this off. Let's look at, and I know it doesn't seem like a lot to you guys, but these are weekly candles. These are making you lots and lots of money using a very simple process. This is sideways action, so let me draw this one more time for you. This is sideways, and the trend starts from this candle down. Okay, now, so if I took the trade down here at the 50 from the previous trade that I just showed you, now we're going to measure from here. Pivot low to this range. And what are we shooting for, folks? 50 to 618. We bought here at the 50, 618. Okay? And there you go. You got your first target. Now that's just a quick demonstration of supply and demand using what I have found by just using Fibonacci's. But the idea is for you to find the right range. Please practice at home. Practice, practice, practice. And again, in no way am I telling you to buy the 50, sell the 88.7, or buy the 88.7. I'm just merely showing you there is a coincidence there. Okay. Now, let's talk about that coincidence and let's talk about those levels. When price comes up to there, one thing that you want to pay attention to, folks, is that if we identify this as a sell zone, you can see here, okay, you can see here that it worked. And, how much did it work, John? 266.45 down to, 198, guys. I don't know about you, and I don't know about anybody else, but 60 bucks to the downside is amazing. When we first bought in the zone, 158 all the way up to 266, $100 I think is a big deal. Okay? Huge deal. All right? So the strategy works. But here's the thing, right? You want to pay attention to how many times it's been tested. See that once, twice. We used to say something in trendy options that I don't really talk about anymore, but we used to say 3 doors or 3 knocks. You knock on the door like 3 times and somebody finally gets up and they answer the door and they let you in. I look at it that way. It doesn't always have to be the third knock, but let's see. There's number 3. Now, the way that I approach these levels, whether you're using Fibonacci or you just draw a box here, is once we get into there, once they open the door, I want to use that entryway, that hallway, as my support now. That's what makes me feel bullish while I'm in supply zone because, a lot of traders are like, holy crap, we're in a supply zone. This might sell off. But you're always paying attention to the number of hits. Okay. Now that we're inside the door, they let us in, right? They let us in. I'm not leaving this place unless they kick me out. All right. And kicking me out means price going below the box again. So let's creep over here. Oh, it didn't work this time. And there's the 4th attempt. And now it works. We close within here. We close outside of it. And now the top of this box becomes support. And in most cases on breakouts, we come back to check it. Let's see. I could be totally wrong. Oh, there you go. You see that little wick right there? And if you can't see it, I'm going to zoom in and you can see right there. That was your test. Okay. And then we're off. Now, I think that I've pretty much explained supply and demand pretty easy. Now, the edges, folks, the edges are merely me just finding that percentage of a range, and that's where we came up with the trendy edges. Why do they work? Because they are associated with supply and demand. The idea is with the edges on your screen, you want to see if those edges have been tested before. Just like a zone, okay, and I'm just going to arbitrarily put a zone up here. Well, we have one there already. And let's just put one here. Just like zones, let's pretend these are edges. Let's just call these edges. Okay. When price is underneath a zone or an edge, it is resistance until it is not. Price comes down. When price comes into a zone from the top, okay, to down into a zone, we look at it to be support until it's not. This edge works. This edge works. This edge works. This edge works. Now it does not. It is no longer valid. Okay. Now, a lot of people ask, do the edges work from a long, long time ago? Years and years ago. Yes, they do. Price discovers edges from years and years and years and years ago. Okay, it does not matter. What matters is how many times have we already tested those zones or those edges. That's what begins to matter. And really, at the end of the day, it does not matter. What matters is that you watch the price action around the edge. Do not judge. Just trade it. When it gets there, understand what can happen, right? So you would trim here, right? you would trim here and you understand that this can happen. So once it starts to break down on you, maybe you have a plan to exit because now you have realized the plan actually works when you find edges and zones. Okay. Now the edges are simply there. If you want them, you just reach out to me. And then you learn and you study the patterns around the edges. The patterns are simply this, folks. When price goes up into an upper edge, look for it to retrace. When price goes up, look for it to retrace. Oh, but it didn't. That's okay. Ride it up. Okay. Where are we riding it up into, John? Not at the back of the box, right? I want to stay long in here as long as we're inside and or above the edge, but understanding that price can still retrace back. Very simple stuff. Okay. So again, why do they work? Because there's supply and demand, folks. They're not a precise, by the tick. So that's why incorporated percentages and what it's doing for you is finding you a percentage within a range where price pivots. See, and that's where I find the discovery of this being so important is that it's really not rocket science, is it? When price moves up and it pivots, it creates supply. When price moves down and it pivots, it creates demand. Pretty cool. Okay. All right. So that's supply and demand. All right. Sorry if I got a little carried away, but I really want you to understand my passion behind this. My strategy works. Okay. It's all about execution, which is going to bring me into my next process of the day. So I always understand where we are on a stock. Okay. That is supply and demand. We talked about some edges. Now let's talk about the line in the sand. Okay. Now let's fast forward and say, okay, well, I want to trade. Let's go over here. Okay. This is Tesla. And man, look at this downtrend. Just down, 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 down. Oh, look, we got this little line down here at 158. At this time, if I looked over here at this entire range, I would say that this little area right here, might be about, 15% or so of this. Okay. And it's in a zone right now. At any time, it can move out of here. Okay. And let me just show you this. If I were to measure from this pivot low to this pivot high right there, you can see 88.7% is right in here. Okay. So it could be about like this. Okay. And we're in there. So at any time, it could turn around. Now, here's the thing. Isn't that cool how I just showed you years and years and years ago, we came across this little guy right here? The idea is if this cannot hold, where do you think price is going? Probably right back down to here, right? Can you believe that? You might get your second chance to make a lot of money in this name. I think that's amazing. All right, so that is that. Now let's say that we're not going to judge this. At this point, it's like, man, I think it can still go down. It could go up. My thought process on how I trade, okay, on how I trade is this. When we wake up in the morning, you guys know how much emphasis I have on the futures. We're basically looking, are the futures green? Are they trending up or are they trending down? Right? Who cares about Tesla? I'm just look at Tesla. But when I wake up in the morning, let's just pretend we're waking up in the morning. We look over here, we look at the ES. It's trading at plus 975. We come over to, let's say, the ES, and I look and I say, on a 15-minute candle, I want to see how the ES is reacting. Are we making higher highs? Are we making lower highs? What is going on? So I can easily look at this and say, well, if I look at the last couple pivots, we are making lower highs. Okay, just draw yourself a little trend line there. If you can see that this is pointing down, that is a lower high. Now, what about lows? Well, depending on what time frame you're looking at, remember it's your perception of this. So if I were to look at this entire range, I could say that we're actually making higher lows. Okay, we're actually making higher highs. But I'm only looking at this range when I wake up in the morning. And I'm thinking, okay, these are lower lows and we have lower highs. We're in a downtrend right now, even though we're up 9. Interesting, right? Or are we making higher lows but lower highs? In this case, we're actually going sideways. Okay, so we're making higher lows. You can see these here. And if you want me to draw you those really quick, you would just use these pivots. There's a low. Here's a low. That's a higher low. Use this high. Use this high. And you can see we have lower highs. So although we are green, we are sideways. So when I get over into the stock that I pick for the day, and in this case, we're going to pick Tesla, okay? I'm just keeping in the back of my mind, folks, that the market is sideways, but we're green. What does that mean for me? Well, looking at the past here in the last several weeks, it just means choppiness to possibly down, okay? Now you can see when we opened up this morning that the advancers sold off, and so did the market, right? It sold off, and then it had a little bounce there at the end of the day, all right? Now, let's get into the intraday trade. What does that look like, okay? And this is where I'm going to start telling you a little bit new stuff of what I'm looking at, okay? So when we look at this, I wake up in the morning, the line in the sand is already on my screen. You can see here, this is the line in the sand for tomorrow. I am simply, look, this is going to blow you away. You need to pick out, you need to get your pen and your piece of paper right now, because this is where things will happen, okay? What we are looking for, no matter what line is on my chart, is we are looking for the candle pattern that I have been teaching in this room for almost 2 years. I didn't make it up. It's been here way before I was alive. Okay? But it looks simple. Okay? There's a candle. It's a green one. You have a base candle. And then you have a higher high. You have another candle. It's red. There's a base candle. It doesn't have to be red, folks. But I just want you to see. And you have a lower low. Okay? The idea here is this. I'm using a 5-minute. Okay? If the price of Tesla gets above the line in the sand and I see this pattern, just like we do on futures, I'm going long with a stop underneath this formation and I'm riding it up into my targets. If we break down below the line in the sand, or even if this pattern is above the line in the sand, I could go short and I could put my stop here or I could put it here. It's up to you and your risk tolerance. And I'm trading it down. Okay? Now I want to show you this. And I want to show you some stocks, okay? So let's do this step by step. And here is the thing that traders will have a really, really hard time with. They won't wait. They simply will not wait. You will take the trade here, you'll get excited here, and you'll throw the computer out the window here. Okay? Now, what are we waiting for? We are above the line in the sand. Do you see the formation that I just drew for you? Well, let's look. Let's take this one by one, folks. Let's zoom in here. This is the first candle. This is a base candle. That looks pretty close, John. But this guy, it failed. Guess what? This is no longer valid. Here we go. There's a candle. There's a base. Oh, we're getting closer. There's a base. There's no candle that makes a higher high. Not valid. Okay? Not valid at all. Now you can look at this two different ways. This is a drop candle. This is a base candle. This is a base candle. This is a base candle. You guys understand that? And this, folks, is a lower low. Your trade for the day here, and look, John's signal, the trendy signal, tells you to go short Tesla here. It's telling you to go short on this lower low. You take the short, and it works out. Now, is this a huge win? Probably not, but it still made you money and didn't lose you money. Okay, take what the market gives you. Now, let's go back and let's look at some charts from today, just really quick, okay? So we had some strong names. I think CMG was one, so I'm going to pull these up. Again, this is all impromptu, guys. So some of this, might take me a minute to find you something. Here's a 5-minute candle. We wake up, the futures were green, okay? And, you like CMG. So what are we going to do? We're going to look for the candle pattern, right? All right? All right, let's do this. And again, disclaimer, just in case you didn't hear me. We can look for the candle pattern below the line in the sand or above the line in the sand. It doesn't matter. You're giving a you have been given a setup. You execute it and you ride it. And if it doesn't work, you get out, right? That's the idea here. All right. So let's start here. All right. First candle, base candle. Yeah, that doesn't work. That's 15 minutes of your life gone. Candle, candle, higher high. Okay, I like that. But guess what? When I look at this, it looks like when I'm looking at it here, it looks like this closed underneath. So really, this is not the trade either. Okay? Although it did work and it looks pretty close. But I want to be real here. This, and this, these are base candles. Within this candle, this is the higher high. This is your trade. You could put your stop here. You could put your stop here. You're supposed to be going long here on this candle. Result from here, the result is here. Boom, boom, yeah. We made some money. Okay, so about 672 all the way up to about 678 using one candle formation that worked out for you. And that candle formation was right here. Okay, perfect. All right, let's go over to another one. All right, and I'm trying to think off the top of my head here. I did post some of it in the room. We had CMG. I think 5 was strong today. Let's go ahead and take a look at 5. And I don't really see a good example in here. You can see this thing just took off. And we're going to talk about EMAs though. So if you don't see the example, we're going to talk about EMAs and how they work. All right, but I mean, there is right here. Yeah, this one, it didn't show a good example, but I'll show you how 5 is traded on EMAs if you think that it's going to work out for you, right? So in this case, it's a 5-minute candle. It broke out above the line in the sand, and we take the trade using the EMA pullback right there. And then we ride this up right there, okay? Let's look at McDonald's. I think that bad boy was pretty strong today. And they could be shorts too, it doesn't matter. Okay? All right, so here's McDonald's. Above the list, okay? And let's go ahead and zoom in here. And you can see here there's no base candles. These are obsolete. That's 10 minutes of your life. This is a nice expansion candle. Base, 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 higher high. This one took a little bit longer. So it's right in there. You take the trade here. Stop goes under here. You take the trade. Wow. And I know you can see this already, but we're riding that EMA like a wave. and that thing made you some money. Okay. So McDonald, again, guys, this is impromptu. That's the only way to do this. Let's just kind of go down the list here and see if ABMD, $6. Let's see. Yeah, that doesn't look good. And you can see, I mean, yeah, that one might be a little confusing for folks. Okay, but it should be very simple. You're waiting for your setup. So let's just say you wake up in the morning, you're like, I'm trading BA. I don't care what anyone says. I want BA, right? I mean, you could have, just sat here and been like, you could have taken something like this, where it's like, okay, that's an expansion candle. We got some bases. I got a higher high. I'm taking this. You would have taken it on the higher high, but unfortunately, you see this wick. Don't forget the wicks. Your higher high doesn't come until here. It's just too much. There's too much expansion in here. I don't like that. Okay, I want to see smaller groupings of candles here. So what I mean is, you're better off taking something that has a little bit more range. So for example, this right here, this is a drop right here, sorry, and a base, 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 higher high. Take the trade here, and then your result is here. So you're taking it at 349, you're getting 350 and some change there. But this, again, this is something that, for B, there's always going to be like rules, right? Like, hey, BA's been super volatile over the last several weeks since the crash. And, unless you like to trade it on news, then really it's kind of off it's off the trading schedule. So for me, I don't really like it right now. And it's kind of like a Tesla for me. Okay, let's move down here. And I think you guys are getting the point here, but I still want to show you so that you understand what I'm looking at. Okay, so let's go over to, we can find something that went down as well. Here's PANW. I actually gave you guys the blueprint on this today. Your biggest thing is you're looking for the setup. None of these made the higher high. And let's see, let's wait, let's wait. Boom, boom, boom. And actually right here, you have bases and you have lower low. You're supposed to be taking a short here. Okay. Same thing here. Drops make a lower low and you take a short. Okay. Now here, I want to show you this. All day it was doing this and people were looking for it to fade. And if you're like, I'm not going to fade it, even though John gave me this beautiful blueprint, I want to take it long. So guess what, guys? You waited all day for this. And I know my candles might be hard for you guys to understand, but the open guys are the up candles and the solid ones are down. Okay, so this is a base candle right here. So this is your rally, this is a base, and this is a higher high. You take the trade here, so you had to wait all day to the middle of the day. And then guess what? You made money from 202 all the way up into 205 and a half. So again, this candle pattern is amazing. Okay, and right after that, you actually got the same candle pattern, but you got two bases in there. You guys see that? That's what that is right there. Okay, so you could have taken the higher high on this and then rode up for a couple bucks. All right. So that candle pattern will make you some money. Now, I was sitting trading with a couple people, and I'll tell you what keeps them from making the money is their patience. They want to front run something. Oh, well, I think this is going to be the one, right? And they take the trade here, and boom, this happens. Okay? So understand that, please. Understand that. This is a time, when I'm sitting here and I'm looking at the market and I'm trying to figure out, what do I want to trade? I'm waiting for this setup. That's what might make me or take some time for me. Okay? All right. So what does that mean? And before we get into that, I traded two things today. I traded QCOM for profits. And let's look at it. Did I follow my system today? And we're going to get there. Apologize. Did I trade it? Okay. So what I did here, this is a 5-minute candle, is this one broke out. Well, it came into the box that, that I showed you guys, and everybody knows is where you want to get long. So what happened is it missed by a couple pennies and it broke out. So my entry was on the EMA. Okay. Now subsequently, it did drop base, 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 and you got a higher high right there. So you could have looked at it like that. However, this is the other form that I want to show you. So I have my eyes on something. It came into my zone. I didn't quite execute it right here. So you have to become the patient trader, right? And so what you're looking for is when price breaks out, if it doesn't come back but starts bouncing off of this 9 EMA, I'm taking the trade. Looks bullish. I'm taking the trade. Now, what if I'm wrong? What is your exit strategy, right? And so my exit strategy is this. I don't want, if I just entered it right here, I don't want to see price get below this guy. Okay. So price did move very nicely for us all the way up, got up a dollar something. Okay. And once it broke down under here, I didn't want to be in it anymore. And as you can see, the result was great. That's your result. All right, folks. So what's the next thing you see here? Well, you could have been an all-star and you could have been like, oh man, that was sweet. Oh, I got out. But guess what it created here? Don't blow me away. This is going to blow you away. That's right. Drop, base, drop. Take the trade to the downside. Okay. Either way, this was a nice trade. It worked out. Okay. And then we traded SPY. Now I didn't use SPY though. I used the ES. Okay, but I kind of remember where we traded this the first time. I'm pretty sure. Let me go back to our alerts just really quick. Today at 11:17. Okay, and that means I believe that means 10:17 here. So what happened was right here. Okay, higher high, took the trade, nice move, and unfortunately it pulled back. Okay, that was the move there, but it doesn't matter. I mean, it went from $1.16 to I think it actually went to like $1.50. And I had a conditional order in, and of course, just like my oil futures trade last night, it did. I was a little short there, but I got out at $1.41, right? And then we held on, um, with a partial there and got out for a small loss, but the winner made more money. So that's that on the SPY. But I want to show you that trade. So as a moderator, my job is to show you what I feel works. And you can see my trades and you can choose to either learn, right? Or you can choose to just trade what I trade. But I feel it's imperative to your overall success of you being a trader for the long haul is that you know what you're doing. Okay. So when we come into the morning, I want you to understand what I'm looking for. And you might not have time to look for this. You got other things to do, right? You have a job. You might be out at a kid's function. I mean, this is what I'm doing here. But the one thing that I want to make clear is that I'm giving you all sorts of setups. All right. We got the new channel that I'm going to name Focus. All right. And I need you to focus and look at these. And what you're looking at is this right here. Okay, give me 1 second. We're going to come over here to focus. And we're going to bring this up right here. And you're going to see if you would have come down here and looked at these. QCOM, boom, we took it. Apple, okay, remember what this showed? Apple, here's your box. Wait for the trade there. It says 177.56 to 177, looking for the hold here or dip to here. Entry to long. Will be on the 3 candle setup. Targets 178.97 to 182. Let's go over here to Apple. Okay. And you can see here, came down to here. Okay. Missed it by a little bit. Came all the way back down. Right. End result, 178.30. We were looking for 178.90, a little shy of that. But if you miss this, right? If you miss this, if you're looking at the swing trade channel, don't forget we have that. This yellow line right here is where I expected, remember, when price is underneath any of my lines, we expect them to be resistance until they're not. How do we know that this line is resistance? And how do we know that it's not? Now, I know nobody's in here because I'm recording this, but you over there, sir, you tell me why. Well, after everything you just told me, John, unless this candle were to make a higher high, then I would be bullish. But see, it did not make a higher high, and therefore I treat it with respect. And if I was in this trade, I trimmed or got out, and that was the end of the story. And then I waited here patiently. Okay? Not bad for a scalp. It came down and touched it to a T, and then pushed right back up into the EMA there. Okay, when we're in a downtrend, by the way, and the EMAs are on top, they are resistance. That's all you need to know. Okay, and when we're above them, they are support. And we'll go over those here in a few minutes. So that's Apple. And then there was Beyond, the power play. Apply fibs from cash close to pre-market high. Okay, we did that. We did that. And guess what happened here? It's going to blow your mind too. There was no expansion candle. There was a base. There was a base, never a higher high. We're not going long here, folks. We're looking for the move back. It just breaks on through. But guess what it did when it broke on through? And I was actually trading with somebody here. You can see here, take this away so I don't confuse anyone. That's right. You got the setup. Expansion, base, drop, go short. See ya. Okay. The lower low happened at 101.38. We got all the way down to 94 bucks. Do you think that's a good short? Yes. Heck yes. Do you think maybe when you got down here to the line in the sand, you probably would have trimmed? Yeah. Because remember what the line in the sand is. Price is above the line in the sand. Therefore, we are looking for it to hold. Understood? Looking for it to hold. And it does give you a nice bounce there. But then it breaks down again. Okay. All right. So that was Beyond. PANW. ER play. We just went over a few minutes ago. I don't need to look at that. But I think you get the idea. So when you wake up in the morning, please take the time to look at the focus trades. Read my notes. Mark up your charts if you like. If you like what I'm doing, put them on there. All right. Give me 1 second while I sip on some water here. Now let's talk more about the list. Remember, any line on my chart, it is price is above it, look for it to be supported. Price is below it, look for resistance. If price is just messing around it all day, don't do anything, move on to the next chart. Pretty simple. Okay? All right. So what is the line in the sand? What is it? In most cases, you guys might have a cash close. Mine is based off a candle formation at the end of the day. The same thing that's being used on the futures. So I'm looking at the 1400 close. Okay, 1400 on a 5-minute close. 1400 Colorado time or the close where you live, and it has to be a 5-minute candle. A 5-minute candle, not a 30-minute, not a 15-minute. And I had somebody I had a conversation with yesterday, had a private call, and they didn't get it. And then they had to change it and look, and then lo and behold, they're like, holy crap, it's actually a different number. Yes, it is. Okay. So what happens is, it's really not that big of a deal. But what happens is right before we close, we pivot. And when we pivot, we create demand or supply depending on the trend of the close. You see what I mean? So what I mean is, notice yesterday Beyond was moving up, is trending up, and it pivoted. And it created a little bit of demand here. How do we know it created demand? Well, pre-market, it worked right off of that. And then when it finally came down here, it actually, boom, you got a nice little pop out of it. So even here, you could have taken a scalp trade from 97.50 into 99.50. $2, guys. $2. Actually, almost two and a half. So, I mean, amazing, right? Amazing. I mean, basically, that's what your line in the sand is. Line in the sand is what it is. And I'm telling you right now, there are traders that have been trading over 30 years who have just discovered this in here and absolutely love it. All right. So something that was only applied to futures, I have now moved over into the equity side. Okay. And that's what we're looking at. All right. So that's the list. That's what it is. And that's why it works. EMAs, let's talk about those really quick. I don't need to get into specifics. On my chart, folks, you will notice that the candles are different colors. For anybody that was in the room, this is all this is a momentum change, okay? And the momentum change is, the crossovers and so forth. The numbers that I am using on this script are 9. Let's just check them, just so that I'm correct, okay? And what I did, the way I did it was, here, let's go over here. Bands will make her dance. And that's what I named it. Okay. If you come over here and you look at bands will make her dance, I have on 9, 13, and 24. Okay. But one thing that I did was I turned off the fast. So really all you're seeing is 9 and 24 because when the 13 is so close to the 9, you get a lot of crossovers, a lot of alerts, and a lot of bad signals. So therefore, that is no longer valid. It's just 9 and 24. Okay. And then what I have over here is I also have a 44. Let's see. Ooh, no, I don't want to do that. Sorry. Yeah, I have a 44 running. Okay, so I got a 44, 9, 24, and a 44. Now, what is the idea behind this? Now let's go back, right? When we go to take our entry in the morning, if I take that entry off of something, we need to find something that has, anyways, let's just say that we took this short here on Beyond. Once it broke down, what I'm looking for is a retest of the 9 and for it to resume down. Retest of the 9, resume down. Retest of the 9, resume down. The idea here is to stay in this trade as long as the 9 EMA is holding or whatever your risk tolerance is, really. Do you know what I'm saying? So if you're up 200% here, and if price were to get here and you can look at your dome or your matrix and you know, hey, I'll only be up 150%, you could say to yourself, I do not want to be in this position anymore on the short side if price closes above this little green arrow, or sorry, this green line. Very simple. And you can see once it closed above there, it was gone, and now this thing's sucking the theta right out of your put premiums. And you're like, man, I should have watched, the 9 EMA and I should have did what it said. I would be up. I'd be doing really well. John was right. Okay. The idea here is if you switch to long, because guys, there's the formation, right? Drop, bases, rally. Okay. Higher high. Now we're looking for the 9 to hold when it comes back. See how it holds there? 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 Over and over and over. See how when it closes underneath, bye-bye. 2 trades right there. All you had to do was wait for the setup and you made a lot of money and that's all it took. Now, the hard thing about this is that, man, you're looking, you go home at night and you got this study thing and you're like, man, this is the trade that I want to do. And you think to yourself, you're sitting there waiting, you're looking at like 6 or 8 charts and nothing's happening. And then you look over and you find something else that's already created the strategy that you're looking for and you're like bummed, and that can frazzle you up. So just understand that you're either going to be waiting on one chart for, it could be all day that, you finally get a signal to go off and it doesn't, give you the return that you're looking for. And then all your buddies, apply that same strategy to beyond and went far beyond what you made for the day. I mean, seriously. So anything can happen. All right. So EMAs, when we take the trade to the upside, it's very simple. Let's look at McDonald's. Okay. Now, what I'm doing is on the entry for the day is that I'm getting in. All right, I've already showed you the process of what I'm doing. I'm getting in on the trade, and then I'm riding the 9 EMA. Okay, but once I get in, I want to switch this over to a 10. It looks a lot cleaner. Okay, looks a lot cleaner. You can see here we got in on the 5, and you can see here no worries, no worries, no worries. This is McDonald's. No worries. Uh-oh. Nope. No worries. And then right here, I'm done. Okay. Now again, if you took this trade down here at 196 and you rode this to 199, I could tell you McDonald's options are pretty cheap, so you'd have been really stoked. And you could have told yourself, let's say that you have, this is the problem when I talk too much, right? Because I can't talk anymore. Um, let's say that you have 10 contracts. You could sell 5 on the break of this, and you could be running 5 here. And you're like, sweet, it held, and you go into the close with 5 contracts, or you could have sold 3 of these at the top again. And now you go into the night with 2 contracts, and you made so much money over here, it doesn't matter. Okay, so that's that. If you are below them, I'm trying to think of something that was really down today. Geez, let's find something that was really trending here. I can't think of anything that was really down today. I think somebody had mentioned, well, this was a good stock, was Vive, and you can see how this worked as well on the EMAs there. Um, Darn, I'm sorry, folks. Off the top of my head, I just can't think of anything that was not doing so well. And there was CMG. We went over that earlier. Just want to show you with the 10 how clean it looks. You know, nice and clean. Stays above. Don't want to be in it right here. Um, yeah, so I think that's good on that. Okay. Now, what about options and sizing? I talk about this like so often, and sometimes I forget, and I want to apologize to anybody that's watching this. Is like when I'm talking, I feel like the whole room's listening. Do you know what I mean? And then I realize, you look at the numbers and you're like, wait, this doesn't make sense. Like, I might have 70 people in here and there's only 10 people listening. And I get responses like, John, that's so cool, man. That really works. And I get all pumped up and I go home and I'm smiling and I'm like, oh, wait, there's only 10 people that watch this, you know? So I'm really hoping that everybody takes the time to watch this tonight. All right, so let's talk about option sizing and how I think. Okay, so I don't try to think about the money. What I try to think about is the process. Okay, and I'm sorry if this doesn't come out right. Sometimes I have a hard time with my words and trying to describe how I feel. Um, but I really try not to focus on how much money I'm spending. I think about the process. If you go back and study a process and it works over and over and over and over and over, right? Then why are you worried about what you're putting into it? Does that make sense? So I'm not saying put, the whole kitchen sink in there, but what I'm saying is depending on what your goals are, like for me, I'm looking for, and please write this down so everybody understands this who's in the room, is I'm looking for 50 cents to a dollar in my options. Now, for some of you, that's not going to sound like a lot. Remember what that means. That means if you bought one option, I'm only talking about 50 to 100 bucks. But if I buy 10 options, I'm looking for 500 to 1,000 a day. Okay? In these conditions, it's been kind of hard to knock out huge winners. I mean, it really has. I mean, like today, squeeze out of, I don't even know what the percentage is, but it's been kind of difficult, you know. But the idea for me is that I have a good process and a good strategy, and I want to only squeeze out 50 cents to a dollar per contract. Okay. So let's say that for me, let's say that I spend a dollar on something and I buy 10 contracts. Okay. But say that like my personality, I scale too fast, right? And I scale, 7 of these things at 30%, right? but then, three of these things are, they go down 10%. That's not like for me, that's not a really good strategy. So depending on how much the contract is, I might do something more like buy 20 contracts, okay, and scale, you know, 15 of these really quick and let the other five run. It just depends. Okay. But again, I think more in terms of I'm trying to get a nice return from this, and I believe in the strategy. And therefore, I want to be able to capitalize and get that return fairly quickly. So again, 10 contracts looking for 50 cents to a dollar, 500 to $1,000 a day. That would make me happy. Okay. And I think it would make most traders happy. If you're only buying three contracts and you see that I'm trimming at 50 cents to a dollar, this is where I encourage you, if you're in front of a screen, you know, you understand why I'm trimming. Okay, so maybe I trimmed here because it's teetering here and we're going sideways and it looks like it's a bear flag, you know, and then the nine breaks and I'm out. That's why. Okay, if I took the trade down here on the drop base higher high, you know why I bought it. If I get out, it's because it broke one of my EMAs for the intraday. Now, I get a lot of questions for, people who are interested in the room or even people that come into the room and didn't ask the question first. Hey, John, do you like to swing trade? Or are you just getting in and out? Guys, we are a product of the market. We give and we get what the market hands us. Okay? So the idea here is to make money. All right? Our idea here is to make money. However, I would love to hold on to things for weeks, but doesn't necessarily mean we're going to get the opportunity to hold on for weeks. So my strategy is to get into the trade and make as much money as I can. If we find something like this and it goes up 300%, that gives me the opportunity to swing a partial into the night. But in most cases, I'm going cash. I am a day trader in most cases. However, you have the opportunity to ask yourself, if you made the same trade with me and you're up 300% and you had three contracts, you decide what you want to do. But there's nothing wrong with taking profits. Okay? Nothing wrong with taking profits. All right. So how do I select option price and fun things like that? I mean, okay, so there's a couple different scenarios, right? So if it's getting towards the end of the week, like it was today and tomorrow, I want to buy things closer to at the money. They have less theta decay. Makes perfect sense. If we're buying on Monday, you can afford to go a little bit more out of the money. But the idea is for me to collect as much delta as I can. So if you don't have an account that allows you to buy the higher strikes like I do, you can, go a couple strikes out. And if you have any questions, please, refer to me and say, hey, John, is this too far out of the money? And I'll give you my own opinion. All right. Personally, I don't want anything less than 30, a delta 30. What does delta mean? That's the rate of change in your option price for the underlying stock that you bought. So if you come over here and you look at, let's see, let me pull this up real quick. If we come over here and look at an options chain, this is Goldman Sachs right here. You're going to have the delta, and if you don't have the delta, all you do, everybody, is that you can click on this and go to uh, the Greeks right here, option theater and Greeks, and I would just add, whatever it is I want to add. Basically, what this is telling me is for every dollar move, I'm going to make 48 bucks in my contract price. Okay, for every dollar move. All right. So in order for me to get that 50 cents that I want, I need, if I were to buy all these right now, if I bought 10 of these, I need the price of GS to go from 187.37 up to 188.37. Okay. So what I was saying is at a minimum, I don't like to get anything under a delta 30. Okay. So in this case, I'm buying at the money for tomorrow's expiration. Okay. That's what I chose to buy. Now let's go to next week. Okay. And I want you to just look at the prices. Let's just say that we're bullish on this 187.5 call. The Delta 50 is 285. And then 36 and 22, I don't, again, 36 is probably my minimum here. $1.50 by $1.68. Okay, understand that. Now, when we're talking about bigger names, I mean, you could come over here and look at Amazon, okay, and you will see that the Delta 30s, if they're computing, and give me 1 second, let's get that down there. And I have all these on, so there's so many strikes, man. 1816, let's move down here. And you can see here, I mean, at the money is super expensive, right? 2590 by 2685, that's 2600 bucks. A Delta 30, it's going to be right here. This fits more into, some people, that's still 1200 bucks. Okay. But I really don't want anything less than that. So sometimes Amazon, a lot of traders want to, pick up Amazon like towards the end of the week when all the theta's kind of burned off, and then those Delta 30s run you about, 300 to 400 bucks or so. Okay. And we could see actually, let's go over here to tomorrow and see what the Delta 30 looks like if we were to get tomorrow's expiration. Okay. And here's a Delta 30. Yeah. So you can see 370 by 450. Now, that sounds expensive. I hear things like, man, that's expensive. If your strategy is good, I don't think about price. I think about my strategy. I don't want to be in this if it breaks so and so. But I do know if it works, this 450 is going to go to 880 or 850 or whatever, right? So that's how I look at entries and exits and so forth. Okay. Try not to think about the price of what I'm buying. I mean, sometimes, when we had one of our members come here and stay a couple weeks ago, at one point I had, all these positions on and I'm like, oh, I was proud of myself, right? It's like, man, holy crap, I'm holding 5,000 of this and 5,000 of that. And it wasn't about the money until I thought about it, but it's more about the strategy, right? And so it's working out really well. You will get the benefits very quickly. All right. Writing the EMAs, one last thing I want to say about the EMAs is when writing these, you will find that we won't lose a lot of money. Let's say that you didn't trim when I got out of SPY today. Okay, so we got in. I think it was $1.16. And I got in twice, so I got in the room and I told everybody there's no way I could have alerted that. I don't want to do that and cause panic because it was so quick. I bought at $1 and sold at $1.25. It was a quick 250 bucks, but today we bought another one at $1.16 and we got out at 1.41. That was 20%. Okay, now if you didn't get out and you didn't get out until I said I was closing. The reason why I closed is because it broke underneath the conditional order of the ES, and I said, hey, if it closes underneath the line in the sand, I don't want to be in. You probably would have got out at like zero point 0.9. Still there, you lose 20%. Okay, so what I'm trying to do is reduce the percentage that you're losing on by using something tight and using a strategy that works. This is probably the hardest part that it took me a long time to understand. And I want you to really sit back and think about this. Is when you trade, it's just a trade. There is no emotion. You are a robot. You have a strategy. You have checked all the boxes when you wake up in the morning. You looked at the futures. You analyzed the trend. You picked your favorite stocks that are moving. You have your lists. You have your bar set up on the candles that you want to find. You execute. You do not think. You buy it. You ride the trend. You ride the EMAs. Price comes back. It touches the EMAs. It bounces. It makes a higher high. You become comfortable. You notice that you make a lot of money. Price comes back down to the EMA and it closes underneath the EMA. You take most of it off, you trim it, and then you tell yourself, okay, I like this. It breaks the second EMA, you're done. You move on and you go to the next trade. Your job is not to follow this stock and go, oh, it went up another dollar. I should have stayed in. You move on. Don't think about it. It's not worth it. Okay? Just not worth it. If it didn't work out for you, and I have a feeling a lot of these are going to work out for you. If it doesn't work out for you, what are you doing? Did you get out when it closed under, or did you go, well, I think it's still going to hold, guys. Guys meaning like the two people that are on your shoulders, right? I think it's gonna hold, guys. I got this, right? So this is you on Amazon today. Well, it broke the first one. Maybe it'll be okay at the 20. You know what? I think I'll wait for the 44. Oh, wow. It broke the 44. Oh, man, I'm getting out. Oh, I just noticed this is John's list. Oh, price went back up. Why did I get out? You know? Okay, I'm going to get long again because I'm wrong over here. Oh, man, it's going back down. I'm getting out again. Oh, wow, we're back at the list. We went back up. If I would have kept the last one, I would have made money. Folks, stick to your plan, execute it, get out when it breaks your rules, and move on. I don't know much about accounts. I have a PDT account, pattern day trader. I have over 25,000 in my account. I don't have to worry about getting in and out of positions. I could do it a million times during the day if I wanted to. And for those who are having issues because you might have rules applied to your account, from what I understand, and this is not advice, but just call your broker, and see if a cash account would be better suited for this kind of trading. Maybe the account size that you have right now or the type of account that you're using does not allow you to get in and out. And so you're being forced to hold trades overnight that you really don't want to hold. Call about that. See if they can do something for you. Okay, that's important. So again, I'm trying to think here. Did I miss anything? You know, I don't think I did. I mean, this is guys, this is a plan, right? This is your plan. Put it with maybe what you're doing now. See if it works for you. Try it out and be patient. Before I end this, please be patient. I sat on the phone this morning with someone. You have to be patient. When you start making money, you're going to understand that patience pays. Wait for the bar setup, execute, exit when it breaks your plan. It really is that simple. If you have any questions, please reach out to me. And you know what? Right before I just thought about this, I have the advancers. That's the one thing you're going to see here. This is advancing. New York Stock Exchange, you got like 2,600, something like that number in there. Basically, this is just telling you who's green and who's not. Basically, it's the overall market. What's it doing? As soon as we started making lower lows here, the market started selling off. You could see that. It just wasn't good. What I want to see is we start above 2000, we dip, we make higher highs. That is the kind of trend that you want to add on at the 9 EMA. That's when we are gaining momentum and then we actually have opportunities to buy the dip. When we are below this really dark red line, those are the opportunities when price bounces, you sell the rip. Opposite. When price is in between the yellow and the white, it's chop chop. Okay? No reason to even do anything in here. You'll just get frustrated, folks. Now I say that, but we're trying to gear towards only following stocks where money is behind them. And that's really important. Okay? Another thing right before I end here. These are momentum change colors in the candles. Green, the momentum's up. White is neutral. Red is down. Okay? You could look at this and go, why not just trade the colors? You can. I mean, you really can. But can you take the emotion out of the trading? Once we went white, even though this was the box setup on Amazon, right? This is the box setup. So is this, by the way. Okay. Sorry, I just get excited. I keep showing you guys this. I want this to sink in. Rally, base, base. Lower low, take the short. Boom. Heaven. Okay. Looking good. If you have questions about this, please reach out to me. I hope this kind of helps clear up things. Sorry about all the rambling on, but I really, really am passionate about this. And what I envision in this room is that we all have like minds and we work together. This is a strategy that works. You just have to put everything down and pay attention and be patient and execute. We'll see you tomorrow morning.